Well, some of the current events, either local or international, are definitely scary. Definitely. But what and how does scare, fright, all of that affect your money? That's the question.
Our financial expert Brad Huffman in this morning to break down exactly what's going on around the world and how that can affect your wallet. Good morning, Brad.
Good morning.
So these are things we don't think about, that like Ebola
Yes.
can actually have an impact on your household budget?
Well, not necessarily your budget, but maybe your 401k, your retirement plan, your investments. And I think we definitely saw this. If you think about it, now that we've had some time to digest it, just a few weeks ago, the market seemed like it was in a free fall. And it happened to be the exact period of time where Ebola was really getting most press here in the U.S. and we had new cases forming. So definitely they have the ability to impact our finances. The secret is what has a meaningful impact on our finances and sorting out what matters and what is probably just going to go away over a certain period of time.
What's a psychological little blip?
Exactly. And I think certainly two of the biggest events right now, easily Ebola and ISIS. I mean, not a day goes by, there's not something new on the development on either front. And certainly they can affect us short term. And I think they certainly did. But what happens is there are ways to control them. And we're seeing that happen. With Ebola, they're fast-tracking the vaccine. We're seeing people make stepped-up efforts to control the spread. With ISIS, we have airstrikes. We have global partners stepping in. So both of those certainly can be scary, and they are scary. They continue to affect many people around the globe. But from our personal finance perspective, they're going to be rather limited, I think. And again, I don't see them being a meaningful impact. I know Ebola probably a little more scary for most people, but I don't believe you need to worry about how it's going to affect your 401k, your retirement plan over the long run.
We can see a direct correlation, I suppose, between something like ISIS happening in the Middle East and how that might affect oil supplies and that sort of thing. So you can see how that would affect Wall Street almost directly.
Correct.
But you think about Ebola and then how that would affect Wall Street.
Yes.
So what's really having the impact there?
I think what it is the fear. Imagine having 1 million people around the world with Ebola. Imagine how would you control that? I mean, it gets very scary when you think about it. And I think that's where we were a few weeks ago. Those fears were real. I had conversations with clients who were concerned about what was going on. And I think that's what the nature it is. If we go from fear and greed, and fear was powerful. I think the greed's kicking back in a little bit here as it's becoming less of an issue and realizing the world's not coming to an end. There's always something scary, and we fortunately have found a way to address it. And I think with both of those issues, we're doing just that.
Right.
I think we just need to go to the Dow and pass out Xanax and tell everybody to relax a little bit.
There you go, yeah.
Well, we're still on that track with the long-term investment, that if you're going to be out there, things like Ebola, hopefully ISIS, are going to come and go along the way. And if you're in it for the long haul, then it's not going to be much more than a blip.
Yeah. And we can look at another big issue. I hear a lot of people, what if there's a major natural disaster? What if there's, and there is, I mean, there's always things. We're mesmerized by the lava in Hawaii, which obviously is isolated, but you can have blizzards, droughts, hurricanes, obviously, and even just this past year, we had that extreme cold weather. That had an economic impact. We saw the economy slow down in the first quarter. It didn't really impact the stock market a whole lot. So again, most of those natural disaster issues definitely impacted people on the front lines. Businesses are affected. You may see certain crops affected, whether it's oranges or coffee beans. So it can have a financial impact on consumers. From us as investors, not as big of a deal. Again, they typically are controlled. Unless it's the asteroid hitting the Earth, it's not going to be something I think is going to materially change.
We did have some meteors last night.
That's
There you go.
true. Yeah, I did see that.
So knowing that emotions are so much a part of investing anymore, should you plan on a conservative strategy?
I think you have to be as aggressive as you're comfortable being. So if you're worried about Ebola, taper back. If you're worried about the asteroid or meteor hitting the Earth, take appropriate steps. Again, I think some of it's irrational fear, but you have to sleep at night. I tell clients you have to have that sleep at night factor. If you're worried every morning what's going to happen, then you need to be more conservative.
Well, how do you keep from panicking? I mean, how do you keep yourself from saying that's it, I'm pulling everything out and going and hiding under a rock?
Have a strategy. You have to understand what you're on. If you have this black box and you have no idea what it's doing, I think you're going to react more abruptly if something happens. If you know you've got a strategy that fits your needs, if you're more conservative, then certainly don't put 100% of your money in Alibaba stock because it can be good or bad. But you have to just find a level of risk that you're comfortable with. And if you don't know what you have, obviously talk to someone to help them. Let them help you figure out what you need to do. So, but one that I do think could have an impact is change in interest rates. This is something that's been helpful for us for several years. And just last week, for nerds who follow financial media, the Fed stopped this quantitative easing program.
What does that mean?
That basically means they have been buying bonds, or money printing, if you will. So they've been injecting billions and billions of dollars into the system, which has been great because it's helped support the stock market. It's helped keep interest rates low. Well, they have stopped doing that, at least for now. What does that mean? Well, we could see interest rates begin to creep up. So if you're borrowing, whether it's a mortgage or auto,
to buy a house,
it could be a factor. If you're an investor, probably going to see volatility pick up because this inherent support that's been there is waning. Now, they're not going away because rates are still going to stay pretty low. I think they're going to start creeping up. So for me as an investor, the next year to 2 years is going to be really important because we're going to see this shift takes place. So don't be surprised to see volatility pick up. We've been lulled to sleep.
And by that we mean seeing the market going up and down, up and down.
Without a doubt, yeah. And now the one wild card is the Fed said, if things get bad, we're going to help you. So we kind of know if it gets really dicey, they're going to be there. But there comes a point where you can't do this. We're in uncharted, we've never been here ever in our history. So what happens next? I don't know. I'd love to see that last chapter. It just hasn't been written yet. So we'll see.
All right, Brad, thank you so much.
This is our roller coaster. Thanks, Brad.